We got another new deal here today. This one is a semi-absentee plumbing company based out of Texas. Same as the others. We're going to go through the deal. I'm going to walk you through first impressions, things to watch out for, red flags, green flags, and then we'll jump into the quick vet calculator to dive into the numbers and see what might make sense to get this deal going, what types of cash flows you're really going to look at with a deal like this. So based out of Texas, semi-absentee. So at least the high level we know is the owner's not super involved, but is somewhat involved in this business. They're asking $1 million, cash flow 305, a little over a 3x multiple, which is not unheard of in the plumbing space or HVAC space or trades for that matter. Revenue 1.1 million, margins not bad at this size, and it's more so with an active owner, but we'd usually see a 30 to 40% margin on an active owner plumbing company where the owner's kind of handling business development or calls or things like that. So not a bad margin. It's a little bit on the lighter side, but that is likely accounted for by this semi-absentee bit. Established 1988, so very, very solid time in business. They probably have a lot of reputation, which, and I think later in here they do talk about how the owner's not pushing anything marketing wise or otherwise. This basically explains it. Is in HVAC, plumbing, trades in general, when you're 20 plus years in business, the phone just rings. You don't really have to do anything. 300 grand for real estate. I believe the star means it's not included, but not an expensive piece of real estate by any means. So the lease on it's probably very negligible. Let's see, leading service provider in the market, good work, customer service. So 1 hour radius, pretty reasonable. But if it's based out of a home office, I mean, unless they actually have to go to this office to pick up like nuts and bolts and screws and everything else that they need, pipe fitting and all that, they don't really need to go here to resupply. So if they have stock trucks, they can probably increase this radius, or this may be an opportunity for a new buyer to increase the radius based on where your employees are. Because if your employees take the truck home, basically stick within an hour of your employee's house, now you have a much bigger radius to service. You can start taking in more volume jobs, and naturally just increase as you continue hiring plumbers and so on. Residential repair, some new construction, not always the greatest thing to see, because this is where you have big ups and downs in profit and revenue. A little bit of light commercial, so I mean, pretty typical. Their revenue is a little bit low for being this broad, but not bad. First call for almost all service work in the local market kind of implies that they probably rank pretty highly on Google, which would happen when you're 20, 30 years in business. Inventory 10 grand, so basically nothing, which is good. You don't want high inventory in these types of companies. That basically implies that they all do new construction or they're heavy on commercial or otherwise. So pretty clear they're doing residential. They don't have to keep a lot of stuff on hand. This is depending, but my guess is this is probably what's fitted on trucks. Furnitures and fixture 148 grand. This is probably the actual trucks themselves. The facility seems kind of crazy. So 3,200 square foot for 300 grand. And I mean, I don't know this area of Texas. Maybe this is middle of nowhere and this is totally reasonable. This seems really large. I mean, a 2,000 square foot shop space for residential plumbing is insane. Doesn't make a ton of sense to me, but maybe this is just what they've set up. And maybe the company only rents like 600 or 1,000 square foot of it, which would probably be, it doesn't say how many plumbers there are, but I mean, $1 million, maybe it's like 4 or 5 plumbers. If it's 4 or 5 plumbers, 1,000 square foot should be more than enough, even with storage and everything else. This seems overkill, but if you can buy a whole facility where you can expand to like $5-6 million in revenue in for 300 grand, I mean, it's worth getting the purchase option. Nothing in here really. Here we go. So maintains market position with no digital presence, no Google, no Facebook, no Instagram, no social media of any kind, and no SEO efforts. That's kind of concerning. Main reason I say that is, if you want to ramp up, you don't necessarily know what works. Like really right now, all they do is pick up the phone based on what they're implying here. However, if they had at least started a website 10 years ago and done nothing with it, it would still rank naturally, meaning you're getting a bunch of extra calls at no cost. The pain with them not having that means you have to start from zero. You're not getting the benefit of a domain and website that's been around for 10, 15 years and has the reputation accordingly and will rank on Google My Business and Google Local and everything as a byproduct. So this is not great to hear. Yes, there's, wiggle room and juice to squeeze. So it's, future pacing potential, but it's kind of a yellow flag because it means depending on how many competitors are in the area, you're going to have to put in a lot of work and a lot of money to try and outrank those competitors. So not the greatest thing to hear. And I think I talked about this in other videos as well. Like it's usually not the greatest thing to hear when a company has done no marketing because you have no data to work from, you have no reputational base to work from. Like, yes, it's an opportunity, but it's an opportunity that sometimes costs a lot more than they think it might actually cost to take advantage. So they did larger volumes of revenue. 2023, so a year and a half ago, they did just under 2 million. So the numbers, this basically implies the numbers are going to show a decline year over year, which as long as they have stabilized is fine. But they've also, they've obviously priced accordingly as well, right? If they did 700,000 SDE 2 years ago or a year and a half ago, now they're priced at 900. They realize that foot off the pedal means lower price. That's okay. It's good to see. But obviously means that just what they're doing is not directly going to relate to new revenue, even if you just come in and operate better. So interesting. And I always love to see reason for selling retirement. Don't comment about the broker because we haven't dealt with these folks before, but obviously, they seem to be doing their stuff well, considering everything here is very in line with what we would kind of expect when we're looking at, potentially declining year over year, owner that's starting to pull the foot off, everything like that sounding good. So let's look at the numbers here. So I've already plugged in. It is widely available if anybody wants to use this. Just go to this URL. Revenue here, cash flows here, purchase price here. Now, likely this cash flow number, because the owner owns the real estate, there's a very good chance, it obviously says here it's home office. There's a good chance this doesn't include the cost of rental. And so what I'm going to do is I'm going to apply a cash flow discount here. I think realistically, if the real estate's only 300 grand, I think like a 5 or 10% cash flow discount is probably within reason. Just given it's probably going to cost you 20 or 30 grand a year to rent it. Maybe less, maybe you can get them down to, $2 grand a month or something, but 10 grand or 10%, 30 grand a year will be conservative. Working capital, I'm going to assume you're going to structure with the seller. You're going to get 2 or 3 months worth as part of the sale. Just given, again, if it's showing year over year decline, you're going to want to structure something like that as part of the purchase price, meaning you're getting it included without increasing the purchase price. Operator cost, it's hands off. Person stepping in is going to be business development oriented. You're probably going to give them a commission or equity incentive if you're not going to be the one stepping in. I don't know the area, middle of nowhere, Texas. I don't know what the income range is, but I'm going to say like maybe 80 grand a year is pretty reasonable to assume. And we'll leave without an investor for now. If you want to come back here and play with this and see what it looks like when you bring in an investor, by all means. But I'm going to assume you'll put up your own 5% close of the deal because it's a small deal. It's like you're coming up with 50 grand, 50, 60 grand. So what it looks like, key assumptions here. So we're breaking down and we're assuming 10% interest rate on the SBA loan. It's high end, but it's pretty typical. Amortization period, 10-year term. Due diligence and closing, we'll assume 4% of the purchase price here. So that's cost for the lender's closing cost for you to bring in a lawyer to the purchase agreement, cost for financial due diligence with someone who can do kind of a proof of cash and things like that. And then you injecting 5% of total project. So roughly somewhere between 50 and 60,000. Actually calculates out here, 51,000. So what this looks like, and we have a couple of variations here to basically show, what if you get a 10% note from the seller, where the seller's acting as the second bank, basically. What if you get 20%? And then what does it take to double up your debt service ratio? And all of this is including what we have here, right? So it's going to be including a 10% discount on cash flow to account for rent. And it's including the replacement of an operator to step in. So this is assuming that you're kind of stepping in as a high level, somewhat absentee or effectively totally absentee owner. So with that said, 10% note doesn't really make any sense. The reason being Debt service ratio, so the coverage ratio of cash flows in against debt that you're going to have to pay to the SBA. This ratio is too tight. 1.5 is really where we sit as a minimum. 2x is really what we want to see. Lenders, foot down 1.15, 1.25, but they don't really care whether you default or not, right? They're always going to get their money. So this is really where we'd sit, is kind of more in this range, 1.5 and up. So I would say a 20% note, seller's going to hold back 200 grand of the price, loan at 784 with closing costs and everything built in. Your debt service is 10 grand a month. Your cash flow out being hands off is, what is that, 7 grand a month, 6 grand a month, give or take. Not bad. That's roughly 6 grand a month. Not bad, all things considered. If you're going to step in as the owner, obviously different scenario. Like, you'll obviously pay yourself a salary, but out of profits. So you'll be sitting on 180 grand in free cash flow at the end of the day, and be able to pay yourself 100, 125 grand a year salary and still have money left over to reinvest. But where I would go with this, rather than try and push like a 30, 40% seller note, because that starts getting rough, this is one where you're probably, and I'm again assuming that rent is not already built in properly, everything like that. I would probably try and get this down to maybe 900 flat, something along those lines, a straight 3x, before cash flow discount, what's roughly going to be between a 3.25 and 3.5 ish times multiple when you account for the cash flow discount. So basically, you account for rent and lease and all that. And on a 20% note, that gets you a lot closer, right? Now you're at seven grand and some change per month as a hands-off owner. If you are a hands-on owner, you have 160-ish in cash flow to play with. There's a lot of room there, especially since you're not going to have to dump in any type of working capital. And so on a deal like this, being able to debt service basically, over 2x on what would be SDE, even though we hate using SDE. But on free cash flow, you're cash flowing nearly 2 times debt service ratio. It's not bad. And that's after placing someone in. Before placing someone in, well over 2 times. So not a bad overall deal. Very interesting. If you're on YouTube, hit subscribe, hit the like button. We always love that. But also go ahead and comment if you want me to take a look at any particular deals or any types of industries or areas. We're always happy to take that feedback and see if we can find some interesting deals to dive into, break down, and go from there. See you in the next video.